Well, we're pleased to have with us once again Daniel Carney, financial advisor from Goodlife Financial Advice. Welcome, Daniel.
Hey, Gareth. Thanks for having me again.
Now, this is the long-awaited discussion on crypto, which we've been promising now for several weeks. So we want to look at today some things like what is crypto, should it be part of an investment portfolio, what about sort of eco concerns, and I may even throw you sort of a curveball NFT question. But let's sort of, I guess, start with the basics. What is crypto? For those of you who know, just fast forward this bit.
Well, I'll confess at the front end that I am not a crypto expert nor the underlying software. I understand it on a very beginner's level. I've been in it for about 5 or 6 years. Started investing probably about 5 or 6 years ago, so I've been following it quite closely. But I'll confess I'm not an expert on the technology side of things. So Bitcoin, I mean, is the most famous cryptocurrency, of course, and I guess the originator. And it was really started originally to become a virtual currency. Interestingly enough, it's kind of veered away from that as time has gone on, because people have seen how parabolic the rise in value of Bitcoin has been, that they're not really wanting to let go of their Bitcoin, which is actually also causing scarcity, which is pushing the price up as well. So whilst it was originally supposed to become a virtual online currency, which was is unhackable, immutable, as they say, it's a trustless environment because of the way that the as they call it, the blockchain technology works across many thousands of computers around the world. So it's unhackable. So it can work as a currency in that it's digital. It can't be replicated. You can't replicate one Bitcoin and copy paste it like any other digital type of file, for example. But because of its volatility, and because people really are mostly wanting to hold on to their Bitcoin, I guess, it's not really being used as a currency. In fact, a lot of people are calling it a virtual gold or a replacement for gold, which is interesting because I think it'll eventually catch up to gold. And the market cap for gold is just over $11 trillion worldwide. Bitcoin is just over $1 trillion worldwide. So, it'll eventually, I think it will eventually get there. So, yeah, hopefully that gives a little bit of an explanation.
Okay, well, there's some facts and figures I don't know, and we've been involved in Bitcoin probably since about 2017, so that's interesting, or should I say crypto. There's a couple of points actually you just mentioned there that we should touch on a little bit later, and that is, I guess, things that are happening with banks and countries, kind of making it official, but what about hacking? Because safety, we have read things about exchanges being hacked and what's that. But for now, let's go to our second question, which is, should crypto be part of an investment portfolio, and if so why would you do that?
In a word, I would say yes, wholeheartedly, people should invest into Bitcoin. I'd say that. Now, here comes the million-word disclaimer after that. I would say Bitcoin is like a growth asset or shares or property is a long-term hold, first of all. Second of all, they say only invest as much as you'd be willing to lose. I in my heart of hearts, do not believe that Bitcoin will go to zero, that it'll disappear. However, you watch any expert online, they all say the same thing, that it's great, and they'll rave all day long about that, but only invest enough that you'd be willing to lose. So I guess that's why the general gist of how much of your portfolio should be in Bitcoin is sort of 0 to 3% of your investment. So yes, I believe it should be a part of an investment portfolio. I believe it should be held directly by the owner, not held on an exchange, as you talked about, because, as you say, it is potentially hackable, also probably unlikely these days. It can happen. So you want to be holding your private keys to your Bitcoin, securing it as best you possibly can. Really, the major thing to be aware of with Bitcoin is if you're going to own it, you have to be ready for the risk side of things. Now, that's not so much, when we say risk, we're not saying we're flushing it down the toilet. What we're saying is that it is very volatile. So that is a risk. It bounces up and down more than any other asset class. So you have to be ready to ride that roller coaster. For example, in the last 3, 4, 5 days, Bitcoin, Ethereum, etc., has taken a real dive. I think it's back probably about 10% or so. So you've got to be ready to see that volatility, and you've got to be able to ride it out, not throw it all in and cash it in and realize that loss. So you've got to be able to stay the course. The big risk there is that you do cash it in and walk away with a loss. So it's not a short-term thing. If you're going to put money in there, you'd want to hold on to it. I'm not a trader. That's not my space. I wouldn't have a clue how to trade when it comes to these kinds of things. I'm about the long-term investment and growing your portfolio slowly over time in lots of different trusted and long-term vehicles. And I do believe that Bitcoin, whilst it's in early days, it's only about a decade old, I do believe it qualifies to be part of that. It's rare, but there is at least one fund manager in New Zealand that will hold crypto within their portfolio. So you're getting access to it through those means as well. Or you can get access to it through those means as well. But I would say hold it directly too if you can. Bitcoin, I don't know if people know this, but the listeners know this, but Bitcoin is divisible to 100 million, meaning there's 8 zeros behind that, 0. So you can put in $100 into Bitcoin. Whilst Bitcoin is, it's about 80,000 New Zealand dollars or something at the moment, around about. You could put in $100 into Bitcoin if you wanted to, and hold on to that. And you'll own 0.000000125 of a Bitcoin. So it is divisible to very small increments. You don't have to buy up Bitcoin. You can buy a tiny little portion or fragment of a Bitcoin, and own that in your wallet. So yes, I do definitely believe it should be part of a person's portfolio, but they should be ready for the volatility and to hold on to it. Would be my advice, and to own their Bitcoin directly, privately, not having it housed somewhere else. I think that's a definite strategy, or part of the strategy as well.
Okay. A few things come to mind hearing that. For example, I remember when the Winklevoss twins converted all of their profits from Facebook into Bitcoin and thinking, oh, they're going to lose that. But the opposite happened, because it's risen. But then they have been into that sort of since early days. And I guess initially is this just another fad? But it seemed to have stuck around. Then Tesla buys Bitcoin and various things. So there's many cryptocurrencies, right? That's kind of seems like to be the original. And then you've got sort of some that came up afterwards, which perhaps are a bit more well-known. Ethereum comes to mind. But then there's been multiple variations, right, since then. And even things that were released as a joke, like Dogecoin, that's one, has then, thanks to Elon tweeting, has sort of skyrocketed in value. So there seems to be sort of a broad spread. I guess what comes to mind is, how do you know what to invest in, and then how do you get it? Like you can't rock up to an ATM and unless you're in El Salvador, and do a Bitcoin transaction. But so what do you buy, and how do you buy it?
Yeah, sure. So just to pick up on something you said, and I'll come back to your question. You're right. Some of the most brilliant minds, financial minds in the world, and companies are investing into and owning Bitcoin. and banks all around the world are coming up with ways to, as I say, have custody of cryptocurrencies. Local tax agencies or government taxation agencies are looking at how to tax it. So we are seeing, as the weeks go by, days go by, the increased normalization of cryptocurrency. And again, I would wholeheartedly say it is here to stay. So how do you get your hands on it? There's a few different ways. I mean, I'm not a massive expert. The way that I do it is I have a few different wallets and that I basically just house on my phone, and they're very secure, two-factor authentication, and if that's the right word, and all that kind of stuff. So you can get hold of any number of cryptocurrencies by downloading these free wallets to house the crypto in. Now, which ones do you buy? Good question. Someone said to me recently, well, a few things I've picked up on is the use case of the technology that sits behind that particular token or coin. You mentioned Cardano, I think, or Solana, Polkadot. Look at the technology and what it's being used for behind the scenes. Does it have a use case? And then what is the market cap of those individual coins? Does it have quite the following? So there are a number of experts that put out YouTube clips on a daily basis that you could watch and just watch them for 6 months to a year and get a feel for what's which are the winning horses and which aren't. Because as you say, there's thousands and thousands of cryptocurrencies. Personally, I just stick to the well-known ones. But you essentially get a wallet or wallets that can hold the particular crypto that you're looking to buy. And then really to buy it, there's a number of ways to do so. There's a Kiwi company called EasyCrypto. I believe the website's easycrypto.ai, but they're a New Zealand company, New Zealand based, and they pretty much allow access to all cryptocurrencies. And it essentially walks you through to your bank account. You pull out however much you want to invest, and it give them your wallet address of whatever currency you're buying, and it'll land, not too long after into that wallet. There's some fees to pay, etc. But that's how I do it. You can do it through exchanges and things as well. But I use EasyCrypto, and I've set up a couple of wallets through, say, Blockchain or Exodus that house my crypto. But I'll very shortly be putting that into cold storage, the Bitcoin. And securing that a bit better as well. So that's how I do it. I just have a wallet and I buy it through EasyCrypto. So it's a very simple, easy process.
Yeah, and I think, look, in the early days, and I'm saying early days, I guess, for New Zealand, but going back a few years, the difficulty was how in New Zealand do you buy cryptocurrency without it being some sort of scam? And so I remember when EasyCrypto started up, because, this is a local company, you could look them up on the company's office website, you could do a bit more due diligence, put a little bit in a bank transfer, and then see, here it is, it's 10 minutes later, it's showing up in my wallet. Okay, that was $10, that worked all right, I'll put a little bit more in. And so that sort of slow approach seemed to work. I guess like anything else, it's just you decide on your budget, little bits off, and build your confidence, as it were, right? But a bit like lending money to a friend. My dad would always say, only lend, son, what you're prepared to lose. So it is caveat emptor, right, that you proceed with caution.
Exactly.
But any portfolio, understand you're right, it has, I guess, your low risk portion, your average portion, and perhaps your high risk portion, and that is kind of part of diversifying as well. Would that be correct?
Yeah, absolutely correct. And I'd say whatever you're putting in now, I would not be surprised by the time 2030 rolls around this is not financial advice or a prediction. It's just my strong feeling about the way that the adoption of this asset class, if we want to call it that, I wouldn't be surprised if what people are putting in now will be 10 times that by 2030. Just the way that it's trending, and the adoption, and where we're at in terms of how the population of the world that own it's actually minuscule. So we've got a long way to go yet for adoption. So really, it's not too late to be getting in. It's actually you're getting right in on the ground floor at the moment. It's early days. As I say, I think I don't know the stats. Something like only 1% of the population of the world, or something crazy like that, owns cryptocurrency. It's very early days, but it's basically like saying, if you could have invested, if this was possible, into the internet when that started, would you have done so? Most would say, well, yes, all day long I would have. Well, the adoption for crypto, it far exceeds how fast people were adopting the internet. All signs point to it going to the moon, and I wouldn't be surprised if it's 10x by 2030.
Okay, interesting. And I guess we're probably thinking like, darn, why didn't I get a Bitcoin when it was, like 100 New Zealand dollars? But it sounds like, okay, yeah, all right, one Bitcoin is $80,000, but if in 10 years it's $800,000, then it was still a good bargain today.
Yeah. Like we were saying, and you said, if you could put aside enough that you can afford to lose, even if you just strip feed that, and you can actually do that with EasyCrypto, you can do like a automatic payment thing. That's dollar cost averaging, and forget about it for 9 years, and then look at it. I think you'll be pleasantly surprised.
Yeah, that does make sense, because I looked at my managed funds and I was like, there's less in there than what I put in. But then I have to remind myself, no, that's what happens. It's going to fluctuate up and down. Don't worry about that, because this is like 10 years anyway. So, you look at the price of your shares, say, in a platform like Sharesies, and I paid for 200 for it, it's only worth 150 now. But again, you got to just not look at that and go, yeah, I bought for the dividends. The share price doesn't matter really, and it's a long-term thing. So I guess you got to resist that urge, like you said earlier, with any cryptocurrency to do the same thing, because then you panic, you sell, and then it was no investment at all.
Yeah, agreed. I put a little quote on LinkedIn and Facebook today. It's time in the market, not timing the market. And we have the technology in the palm of our hands, so it's so tempting to be looking at it on a daily basis. And I must admit, I do that too. And you can if you like, but you have to be very unemotional about it. Because like I say, it can just go. And Bitcoin is notorious for having what they call the halving, where it can halve in value, and that is a scary event. But it happens, and guess what happens? It reaches a new all-time high after that. But as time goes on, we're going to see that volatility is going to be less and less. Admittedly, it's going to probably take a while because it is very volatile, but it is going to get less and less, and probably the parabolic rise will also balance out a bit as well. However, I still think there's a long way to go. And if my advice, and people can do what they like, but my advice would be get in and stay in. And if it dips, grab some more.
Right. Yep. Okay. When everybody else is fearful, that's when you buy, sort of as per Warren Buffett.
So, Gareth, I'm hearing almost on a daily basis clients wanting to invest into crypto, or they already are in crypto. And I guess they need to know about all of those things that we've been talking about. But one key area that they really must know about and get right is the taxation side of things. And again, I must admit, that's why we have people like you in our lives. I need to skill up on this kind of stuff. So can you give us a bit of an idea of what our clients need to be aware of when it comes to the taxation side, how the IRD sees the taxation side of cryptocurrency?
Well, it just so happens I have some material right here on my computer. So
wow.
Yeah. So here was I thinking that people like me were in your life because of my great facial hair, but actually it just sounds like it's for tax purposes. I'm deflated. Now, excuse me, friends, if I'm looking off slightly to the side, it's because on my other screen I've got a little bit of information that I want to refer to here. So yes, I guess, look, the basic premise, it's a good question. As any sound investment or business strategy, you always need to know about tax. That's the component of it. So essentially, IRD have said that cryptocurrency is treated like gold. Why do you buy gold? Well, the idea is it's bought to sell and make a profit. In other words, it is assumed to always be taxable income when you sell your crypto, or when you change it for another currency, interestingly enough. So let's say you bought some Bitcoin and you want to get some Ethereum, trade it for another currency. That is a sale of the Bitcoin and a purchase of the Ethereum, and then there's fees. So that's a taxable sale at that point there when you buy the new cryptocurrency. So that's something that could catch you out, because you think, I just changed it for this. Well, you did, but actually you sold some cryptocurrency at that point. And how do you work it out? Well, it's sale price minus buy price minus fees. So that's sort of your sale on it there. There is, I'll talk in a moment about airdrops and hard forks and about mining crypto.
Can I just interrupt you real quick, Gareth? So what about if you're just holding on to it and it goes up in value? You don't sell it, you've just held on to it and it's gone up in value.
Yep. So that's fantastic. It just means when you eventually sell it, you'll make more money and you'll pay tax accordingly.
So it's not it's not like a property where there's no capital gains tax after a certain amount of years, anything like that. It's just you're going to pay tax on the profit when you eventually sell it, regardless of when you sell it.
Yeah, except there is one exception, and that is if you're staking. So staking at this point, you'll hear about this concept often. So I'm just going to read you this because the definition is so good. Basically, staking is when you commit your crypto assets, you buy them and you commit them to support a blockchain network and confirm transactions. And to illustrate, that's jargon. So what does that mean? So if you think of it this way, it's a bit like you deposit cash in a savings account and then the bank uses that money and lends it to other people and it pays you interest, right? So in that scenario, the cash in the account, that's not taxable, income. That's just money you've lent to this institution. Your income is the interest that you're earning. So when you stake your cryptocurrency, then that's essentially what you're doing. You're the depositor. You're earning interest on your crypto, and the holder of that crypto, they're using it for other purposes, for confirming transactions, etc. So you're not there when you sell that. That's not taxable income because it's been staked. Your income is the interest or other things that you might earn from that. Maybe they pay you in coin or something like that. Okay, well that's going to be taxable. So staking coins is similar to earning interest with a bank. That's really the only instance when the Inland Revenue Department is going to accept that your sale of crypto is not taxable income. And of course then you'll have the proof of that, and you would have been declaring your income from your interest earnings, as it were, along the way anyway.
And that let's just say you earn 5% per annum on that. That 5% income that you've earned by staking, is that just taxed at your standard income tax rates?
Yeah, so whoever the owner of that coin is, like let's say for example it was held in a trust, then that's going to be taxed at 33% in the dollar. If it's declared through the trust, or if it's distributed out to a beneficiary, it would be taxed at whatever their personal income tax rate is. Okay. Yeah. Now, I'll just mention a couple of coins, for example, that can be used for staking. Ethereum is one. You have to have a minimum of 32 Ethereum to do that. It's expected, apparently, that the rate of return on Ethereum staking is 5 to 17% per year. So that's, especially considering interest rates at the moment. Interesting thing to just look up on Google how much 32 Ethereum costs. It's one of those autocomplete things. You start typing that in, 32 Ethereum in. It's like, okay, lots of people have looked this up before. So there's other ones, EOS, Texos, Cosmos, Cardano, Polkadot, and so forth, which you mentioned earlier. Those are some popular crypto staking coins. So there are some risks, obviously, in that. Crypto prices, as you mentioned, are volatile, and so they can drop quickly. And let's say you've staked your assets, they suffer a large drop, and so if you panic and sell it, then that might outweigh the interest that you earned. So again, it echoes your earlier advice, Dan. You just hold your nerve, right? It's a long-term investment. Staking can also require that your coins be locked up for a minimum amount of time, and so during that time you can't touch them. It's a bit like saying to the bank, "Here's the money in a term deposit," and then that's it. You can't touch it for that period of time. And when you want to unstake it, there could be a period of maybe 7 days or even longer to unstake it. And of course, I noticed earlier that you mentioned about storage. We comment briefly. Hot wallets, obviously, for crypto to be manipulated, it's either in a hot wallet, which is some sort of app or exchange, as it were, or a cold wallet, which is a physical device and offline. And Trezor, for example, is one of the well-known ones. But you probably, if you Google cold wallets, there are nightmare stories of people losing their cold wallet, forgetting their keys, forgetting where they're stored, people losing millions of dollars equivalent, chucking it out in the dump, things like that. So it's interesting, this thought of maybe spreading this across several storage methods, because you're also then minimizing risk by not having all of your metaphorical eggs in one basket, be that a hot basket or a cold basket. So
I agree.
That's the taxing side of things. What about mining crypto? We'll just talk about that. Basically, this is, where you have your computers churning away and generating cryptocurrency, because particularly Bitcoin, it's one of these ones where mathematical problems have to be solved, and they get harder and harder, and that requires more and more computing power, which is where some of the controversy has come in order to verify transactions on the blockchain. So if you mine cryptocurrency, then yes, IRD says you are in the business of making money. You're a miner. You're not a miner in the sense of being under 18 or whatever. You're making money, so this is 100%. Your profits are going to be taxable. Of course, though, there'll be costs. The cost of your gear, which would be not inconsiderable to mine Bitcoin. You need some pretty amazing rig, and your power, of course, and things like that. And just briefly, while we're on tax, airdrops and hard forks, I will just mention a little bit about that. So if you get new crypto assets from an airdrop, that could be taxable on receipt or disposal or both. And there's a few things around that. I'd actually suggest IRD airdrops, which sounds like a new brand of shoes, but check that out. They've got quite a nice little easy to read description of when receipt is taxable, when disposal is taxable. So hey, I got some free coin, great. Yep, fantastic. That's probably going to be taxable income. And it's something similar with a hard fork, so they started off with Bitcoin, and there was Bitcoin Cash, and there's various iterations, and so everybody who had this suddenly doubled their crypto, as it were, because they got all these this new coin. Generally, when you receive crypto as a result of a hard fork, that is unlikely to be taxable in most cases. So that's good news. But again, are you in the business of crypto mining, etc.? Disposing of it, so selling what you got from the hard fork, that's probably going to be taxable. So it really does pay. I would say good record keeping is essential when it comes to cryptocurrency, because you need to know the New Zealand dollar value when you bought it, the New Zealand dollar value when you sold it, and details for each one. So your app or your platform should give you that information, but you absolutely need to keep that. So if you're smart enough to get into crypto, I'd say be smart enough to keep really good records. That's my spiel, brief overview on the tax side of it.
Okay, cool. Right.
So, eco-friendly. We've already actually talked about safety, haven't we? Because we kind of touched on this with hard cold wallets and hot wallets and so forth. Eco-friendliness. So just to comment on that, one thing that we have heard from some is, but doesn't, Bitcoin is heating up the planet because it's vast amounts of energy to mine it and blah, blah, blah. Any comments on that, Daniel?
Yeah, look, I would. There's obviously the naysayers out there, and usually they'll talk about energy or that it's used for nefarious reasons, or to buy drugs or whatever. All I would say to people is do your research. You'll be surprised, and there's plenty of information online about that. And I think you'd come out the other side feeling quite comfortable, and probably pulling more away from a country's fiat currency than crypto if you do your research. So you might be surprised with what you find in relation to those few things about energy consumption and illegal activity around these types of assets.
Okay, good to know. Look, that's probably a very wise answer, because that's a safe answer there. Yeah. But I guess the point is, as an investor, ultimately, you get advice, but you've got to make the decision, right, and bear the responsibility, and that's part of maturity as an investor, isn't it? So if you're investing in something, especially it's the volatile end of it, this is just part of your due diligence as an investor. Would that be correct?
Correct. Yep.
Yeah. Now, interestingly enough, folks, there are some, I guess, cryptocurrencies which are seen as, or even perhaps market themselves as more eco-conscious, and things like BitGreen or Cardano, Chia, etc., etc. But ultimately, as Daniel said, it does come down to doing your research, getting your advice, etc., and then making your decisions. Lastly, any comments on NFTs? Is that something we can talk about, or is that another whole webinar discussion?
That's a whole other.
Okay.
It's a whole other discussion, definitely. Yeah.
All right. So tune in, folks, at a future time when we will take the subject of NFTs, and what are they? Should they be part of your portfolio? And if so, how do you get them, and so forth? Watch the space. Well, thanks again, Daniel. As always, details will be in the contact section below. And if you want to talk some more and get some investment advice from a qualified financial advisor, then certainly do talk to Daniel.
Thanks, Gareth. Appreciate it.